Uh, Good day, traders. How are we doing today? My name is Nathaniel Tunde again. I'm here to bring you important topic today. I want to ask a question. Why are you struggling with the market? Why do you struggle with the market all the time? Always, always. You see yourself struggling with the market. You see yourself trading the market with headache, guys. Headache all the time. Market keeps messing you up. What is the problem? You are supposed to trade the market and be happy. You are expected to trade the market with joy. Is there anything you are doing that is not right? Have you been able to figure out what the problem is? These are the things I want to discuss with you today. If you just start off trading as a beginner, every focus, every attention when you are trading will be on the dollar value. You need the dollar, you need the pounds, you need the currency, whatever currency you are using in your country, you need that currency. But guys, everybody needs that currency. But patience and discipline is key for you to get the currency. Winning in the market belongs to those that are disciplined, guys. I'll give you an example of a friend who just started trading with us, not quite long, maybe 2 weeks or 3 weeks. I expected this guy to focus on learning, but lo and behold, within 2 weeks, he has taken more than 500 trades in his live account, and the account is messed up. Why was the problem so? It was so because the interest of this guy was on the dollar value. The dollar that he was going to earn was his sole interest. His interest was never on the process. The whole attention was focused on the dollar. Everything about the process was rejected. That kind of a guy is example of people who believe that you must do practical before theory. Anytime you want to do practical before theory, it's not going to work. You are going to kill the person. All right. You are going to kill the person. You are going to kill the instrument. You are going to burn down the factory because you know next to nothing and you want to do practical. A student of medicine who just got admitted into the university just barely 3 months or 2 months, now came home and told us, for instance, that he's a student of medicine. Now is ready to carry out surgery on people, is ready to, help the pregnant people to deliver. You were just admitted just 3 months ago. You have not even visited any laboratory. You have not been introduced to surgical equipments. And you are telling me you want to carry out an operation. It's going to kill everything he puts the surgical knife on. It's going to kill it. Even if you give him a rat, that rat is not going to succeed. It's not going to survive under 10 minutes. It's going to kill that rat. That is the same thing that is applicable to forex trading. If you have just started learning forex, you have not learned the process, you have not learned the skill very well, you have not understood the market perfectly, and you want to go in and start to gamble with your live account, that account is going to go down. So you must first experiment the same way that, when there's breakthrough in medicine, they first, experiment with rats. They want to see, or maybe breakthrough in drug production and all those things. They want to experiment this drug on rats first and foremost. They want to see the reaction, the behavior on rat before they apply it on human being. The same thing is applicable to forex and financial market trading. When you are learning off, you want to experiment on, you know, you want to do paper trading, you want to do a demo trading to experiment your skill on, you know, on a dollar that you cannot withdraw. If you are doing well there, it tells us that if you come to live account, you are going to do well too. You are going to do well too. That is how it will go. So why are we in competition with the market? Why are we struggling with the market? Why? When you struggle with the market, I can bet it with you, you are not going to make money. People who follow me rather very well, they will see that when we don't have opportunity, we leave the market. We don't need to struggle with the market. But when opportunity comes our way, we go into the market, take whatever we can take, and we go. That is how it should be, and everybody comes out happy. It's better you go into the market, when opportunity comes, take whatever you take, be happy, than at every point in time, you just want to be in the market. At every point in time, you just want to trade. You just want to do something. Why? For instance, look at this pair. I have identified this as an impulse. This is a triangle. I'm expecting this impulse to come. If this one has not stepped down to give me this confirmation, I will not take this one. So I have no business trading in between this area. And that is where some people are taking buy, sell, buy, sell, buy, sell. It will give you headache. You are struggling with this market, guys. Always trade a continuation impulse. That is what you should take. This is an impulse. This is correction. Then we're expected to take this continuation to the upside. Okay? And by the time this continuation to the upside comes, it's going to be very fast like this one. It's not going to slow us down. That is what you want to trade. And when these three waves is completed at C, we want to look for setup to take this wave to the downside. It's going to be very fast. This one, guys, can you see that this one is expected to be corrective? I don't want to have headache. We can't trade correction here. That's why you didn't see me putting an indication that I'm going to buy here. In my plan for this pair, I didn't put anything here to indicate buy, guys. I didn't put anything here in the middle here to buy this wave. No, I don't need to buy this wave because it's going to be very slow and very corrective. Okay, it's going to be like this, guys. It's going to be like this. What I see here is the characteristic of what I'm expecting in the middle here. So I don't need to take it. So when it is done, I will not take this one to the downside. In that way, you see, at every point in time, we will not struggle with the market. We will not struggle with the market. Market is smarter than you if you don't know what you are doing. If you have lesser information about the market will outsmart you, will outrun you and punish you because of your lack of knowledge. That is why at every point in time, you must strive to increase your knowledge about the market. When you know what your competitors are doing, you are in a better position to strategize on how to win them, and you will definitely win them. But when you don't know what the market is doing, you will not be able to strategize. For instance, look at it. I have identified all this, that this is a triangle, for instance, guys, that this triangle is going to complete here. And I'm not forgetting the possibility of this triangle breaking this boundary. It's allowed to catch liquidity here. But I don't see a strong impulse here that will make this to come and catch liquidity here. So I'm expecting this move from here to the upside. This is a plan, all right, based on the knowledge that we have about the market. And we are using that plan, to outsmart the market and to take whatever we want to take from the market. But you stand there, instead of you to seek to improve your knowledge, you are struggling with the market. Stop struggling with the market. It is not the number of trades you take in a day that matters, guy. It is not the number of trades you take in a day or in a week that matters. But remember, many of us have been in your position before, where in a day we're taking like 30, 40 trades in a day. But with time, maturity came in, experience came in. But remember, those days, we had no opportunity of getting a credible mentor to show us some of these stuffs. But today, you are very privileged to see somebody to tell you the real market, to tell you how the market behaves. You are seeing somebody to show you the right thing to do at the right time so that you will be at the good side of the market. Why are you struggling with the market? Why are you struggling with the market? I have seen people who trade this market and want to make millions in just one trade. They want to make all the money, guys, in just one trade. I am declaring to you today that you cannot be rich with one trade based on the size of capital you bring to the market. You can't be bringing $5,000, $10,000, $20,000 to the market and you want to be rich with just one trade. It's not going to work, because if you must be rich with one trade, in that circumstance, you must be ready to risk all your money. So that probably if you risk all the $20,000, if you get 1 to 10, then you'll be having $200,000 in your account. Oh yes, in that case, you'll be rich. But I'm telling you that no investor will be ready to risk the whole capital he has on just one transaction. And that transaction is even probabilistic in nature, that it can fail, it can succeed. So if it fails, what happens? He loses the whole of his investment. That an investor will never attempt to do, guys. That is why you must use appropriate risk. If it is not possible to make all the money in this world with just one trade, guys, I am begging you, you should not also lose your account because of one trade. And this goes straight to people who do not use stop loss in trading. As far as I'm concerned, it is criminal not to use stop loss in your trading, because you will soon be out of business. Because what you are telling us is that you are an investor who is ready to risk the whole of your capital on just one trade. Can you see what I have done here? I'm expected to enter buy if this setup play out from this level. See my stop loss. I put stop loss here. And if this one plays out and it's buy to this place, I'm expected to enter sell around this level and put my stop loss here. Then if this pullback come to 50 to 61.8, I'm expected to enter sell here and put my stop loss here. Can you see? All the plans are there. Then you are struggling with the market, and because you say you don't want to lose, like the mistake I made when I started off, I don't use stop loss. Why? Because I say I don't want to record a loss trade. Then for a $2,000 account, I will be having a drawdown of 1,400. And at that moment, you just stand somewhere. If anybody talks to you, you will gentle. You become very gentle. If somebody talks to you, you become incoherent in your speech. That is the problem people like that normally have. When you have family, they talk to you, you become very aggressive toward them. Why? Because you are passing, you are passing that burden. You are transferring that aggression on another person. And it is you that is doing yourself. Nobody is doing you. Nobody is hurting you, guys. You are hurting yourself. Why? You refuse to apply proper trading techniques, proper process, lay down rules are not followed. So you must define your risk. If one trade will not make you rich, one trade should not blow your account. So you should know that your analysis is your own analysis, and market is not bound to respect the analysis. Your analysis remains your own. It's subjective in nature. If, for instance, you have this setup like this, you have a trend that is going this way, and you say it will pull back like this, go this way, it will pull back like this. And you are now saying, okay, since you have it like this, maybe you are a lover of trend line, and you have put your trend line like this, guys. Perfect, perfect. So at this level, guys, this is a buy opportunity. You have measured the fib of this one, and you have gotten a perfect 50 to 61.8. This is a buy opportunity. Fine, 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 fine. You have come here, you have taken this fib of this impulse, and you are saying, because this one played out at 61.8, you are now saying this is 50 to 61.8, we are going to buy here. Whereas this market, as it was coming down, guys, it made this structure for us. Where's the structure? Okay, it made this structure for us. It pulls down. At this level, it now consolidated like this. Common sense will tell you that when this market is going down, by the time it comes to this area, this length here, guys, is shorter than this one. So by virtue of that, this length here, this is impulse, correction, continuation. This continuation, by the time it hit this trend line, guys, is shorter in length than this with A. So for that reason, you should expect that this market should come like this. In order for this wave to be equal to this wave. Can you now see that it has failed to what? To maintain your trend line. It has failed to maintain your trend line. So you doing analysis by drawing trend line like this and saying that each time market hits it, you are going to take a buy. It is your own analysis, guys, and market is not bound to respect your own analysis. If you are not knowledgeable enough to know what market is doing, you'll be thinking that market must respect your analysis. No. It is you that must understand what the market is doing, understand the information that the market is presenting to you, and then prepare your mind, to react. So you allow market to fall into your hand and react to whatever the market is doing. But many people, as the market is preparing itself, to present information to us, they have already reacted and they have not seen all the information. So, but like us now, if you trade with us, after seeing this consolidation here at this level, already we know that this move to the downside here is not going to end here. It's going to come here. And the fact that it's breaking this trend line, guys, does not mean that there is change in trend. It does not mean that there is change in trend. It does not mean so. Impulse, correction, impulse, correction, impulse. Okay, it doesn't mean that there is change in trend. Why is it that there is no change in trend? Because this is a strong move to the upside, and you will see that even though this market has hit below 50 to 61.8, you also know within yourself that by rule that govern, the formation of zigzag corrective structure, you will know that it's a sharp correction to the downside in the case of a buy trade, and therefore the potential to hit 78% retracement is there. And where is 78% retracement, guys? 78% retracement is below the trend line. Can you see? Trend line is at 50 to 61.8, but 79% retracement is below the trend line. And so many people will tell you guys that since this trend line is broken, we are on our move to the downside. It is a lie. It is a lie, guys. Don't listen to such fake idea, such archaic idea that if a market breaks trend line, oh, we are now going to the opposite direction. No, it doesn't work that way. This is an impulse. This is a corrective structure in 3 waves, which is a zigzag. It has broken trend line, but then it has caught liquidity here at demand, because this was a strong push to the upside. It has caught liquidity at the demand. Then you have this push to the upside. So what am I saying that's making you to struggle with the market? You are looking at the market, respecting the trend line that you have drawn, that you did it yourself, that is subjective to only your own analysis. It's not objective. So anything that is not objective is not bound to be respected by many, because it can change. That's what it means. That is what subjectivity means. 2 people can come and have 2 or 3 different opinions concerning what you have done. So if you don't do any analysis where 5, 6, 10, 20 people can come and agree on the same opinion, that analysis is subjective in nature. But immediately you bring 5 different people to look at the analysis, and each of them is coming up with different analysis concerning that particular pair, you know that what each of them has done is subjective in nature. So until other techniques are brought to it, before you can increase the level of objectivity. And that is why you see some of us at our level will give you 10 forecasts and you have 9 correct. 9 will be correct out of the 10, because a lot of ideas have been brought into it to increase, to make it, to move from subjective level to objective level. Do you get it now? So that's one of the reasons why you struggle with the market. That's one of the reasons you struggle with the market. You are drawing a trend line and you want the market to respect the trend line. And then when the market when the price gets to the trend line, you do not wait for confirmation. Just going. And where are you going to put your stop loss? If you should buy here, you put your stop loss below the trend line. And of course, you must have heard what is called trend line liquidity. It will break this trend line, grab liquidity, and then still move to the upside. So you must be one guy, and you must take note of some of this stuff. Another reason why you struggle with the market, guys, is because you don't plan your trade well ahead of time. Don't trade any setup you have not planned, guys. Any setup, guys, you have not planned, do not trade it. Otherwise, you will be competing with the market. You'll be struggling with the market. For instance, let me give you an example, guys. I want to give you an example. Let me give you an example. This chart is cluttered. Let me go to another chart. Let me go to Euro JPY. Okay. For instance, can you see, guys? I have planned this pair down. Everything I'm expecting from this pair, I've already planned it down. So if you are trading and you have not planned the pair you want to trade, you have not planned it on what you want to do, don't even attempt to trade it. Do you understand? If you have not planned it down, if you have not planned this pair, if you see this move going to the upside, what are you going to do? You just buy. Why? Because it's bullish. It's bullish. Let me buy. It's bullish. Why? You have not planned to see that you have a 3-wave structure here. You have triangle here in the middle. Then that triangle, this push to the upside is just to grab liquidity, is to complete the triangle as an overshoot, and you're going to have this 3-wave down to the downside. But because I have planned this pair before, if this buy comes, strong buy comes, I'm not going to struggle with this market by buying this one. I'm not going to buy it, guys. I won't buy it. Because if I buy it, I'm struggling with the market. And why am I struggling with the market? I did not plan this trade before. You just jump into the market and just see a candle is going up, you are buying. Another candle is coming down, you are selling. When this selling will finish, close. Another one is going up, you are buying. It does not work like that, guys. You'll be losing a lot of money in the market. You'll be losing a lot of money, and it's not the best. So the major reasons why there are many losers than gainers is because many people who are losing did not plan their trade before they go into that trade. They did it. So that is why you must always plan your trade. It's a trick that you must, it's a skill that you must have. Also remember that you are in the market to win. You are in the market to win. And so follow the market makers. Follow them in their direction. You can imagine a situation where at this level now, where this market from here, this market has bought all to this level. If we see a breakout here, some people will still buy. Some people will still buy. The question is that if you are a banker and an investor comes to give you money, and some people have been buying here, are you going to buy at this level for your investor? Are you going to buy here? If you buy at this level, you'll be shocked. You'll be sacked because that is not the right level to buy. It's almost getting to an area where you should sell, where people are taking profit from their buy. You want to buy from there. Don't you know that your buy from there at that point in time is a liquidity for their sell? You are creating pool of liquidity for their sell. And I beg of you guys, do not be part of those that do that, because you will not make anything from this market. Okay, guys, so that is a quick tips I want to give you. Do not struggle with the market. When you have lost first trade, you have lost second trade, you have lost third trade, just close for the day. Do not do more. Close for the day. It means that your analysis is not right that day. Continue to practice overnight, and then the next day, freshen up and start again. Or you can even leave 2 days. If you lose 3 trades in a row, go back. It doesn't mean your strategy is wrong, because I know there are many new traders that if they trade for a day, they lose maybe 4 trades or 5 trades in a row. The next thing they are going to be talking about is that, oh, the strategy is very bad. They're going to jump to another strategy. They will go and try another strategy. It does not work that way. If you have put your strategy to a test on a demo and you have won up to 50 to 60 times, you won, and then each time you are winning this 50 to 60 times, you are always winning with 1:3 risk to reward. And then each time you are losing between 60 to 100, each time you are losing only 1%. This is what you need, guys. Forever and ever, you'll be a profitable trader. When you are winning with minimum of 1:3 risk to reward. And when you are losing 1%. You don't need more than 50% win rate for you to be rich, for you to be consistently profitable. You don't need more than 50 to 60% win rate. Then why are you struggling with the market? For instance, look at this. Let me clean up all this. Look at this now, guys. Look at this. You see all this right here, request, guys. It's an impulse. You see the previous low taking. This impulse now, you have 1, you have 2, you have 3. And if you take few of this impulse now, right here, real quick, guys. Where is it? You are hitting 50 to 61.8. 50 to 61.8. Ordinarily, because this is a zigzag corrective structure, it's expected that this should come over here to 78. But of course, it's not every time the market will behave like that. This will have been a perfect area to sell. But of course, you see supply here. There's a lot of liquidity here at supply, and market took it to the downside. Can you see it now? So you are not expected to take action on this corrective structure. What you are expecting is this move to the downside, because you have impulse here, you did not trade it. Why is it that you don't trade this first impulse? Let me show you guys. this first impulse. Why is it that you did not trade it? You did not trade it because you don't know the extent to which it will go down. So it is better to leave it. But you now see 1, 2, and 3. This is corrective structure that correct this impulsive leg to the downside. So because it has corrected it well, what do? You can take it to the downside. Can you see that this one now is very fast and sharp? This one is very fast and sharp. This one in the middle is very sluggish. So you don't struggle the market with the market by trading this one. Don't trade it. This is your trade as continuation. As you also see in this analysis here, we have also seen something like this. Okay, a flat top and a rising bottom. This is a triangle with A, with B, with C, with D, with E, and you have this move to the downside. Can you see that this one is sharp? We're expecting another one that is very sharp like that here. But don't forget, this flat top that we have, there is a rule in triangle where if this one consolidates, it can come and break it to the upside before it will fall. This is what is called overshoot. So this one can overshot this trend line, or overshoot this trend line rather, can overshoot it and break it to the upside. It's allowed. That does not invalidate this structure as triangle. It's still a triangle. Do you understand, guys? It's still a triangle. So from here, you can tap liquidity from supply. Then from here, you take this one to the downside. So why are we expecting this one to be fast, guys? Because this one was very sharp. So all this very slow. We expect this one to be very sharp. So we don't take this one. We don't take this one. As this impulse comes, then we take this one. This is the right one to take. Okay, the only way you will take this one, you can take this one. Why? Because you have seen the impulse here. This is your corrective structure.